Come on. Yes, I think it's done it. Okay, it's done. All right, let's get the show on the road. 15 minutes late. Okay, thank you for bearing with me through that absolute nightmare of a technical hitch and difficulty. But as you know, I've come with the sauce. Not only am I going to deliver some long-term investing stuff, I'm going to try and deliver some short-term day trading stuff as well. Some techniques that I've taken from Ludo and Darren and them guys. So as you know, for those of you on YouTube, I am Mr. Hardin. So little disclaimer, please do your own research. Anything you may see on my show, I am not a financial advisor. I do not pose as a financial advisor. If all investments and trades come with risk, if you are unable to mitigate your risk, please contact a financial advisor. I'm working alongside one by the name of Victoria Navarro. If you have any questions about how to do your research or how you can get a financial advisor, please contact me and I can point you in the right direction. I can only show you the results that have worked for me and work for other people working alongside me. So let's get into it, finally. So the first thing that we're going to look at is how the past shows the future. So we're going to look at the biggest winners and losers of 2020, just to get a bit of an idea of what might happen this year. If this year is anything like last year, then we'll get a bit of an idea of what's going on. So when we look at the asset classes, we can see that silver had massive returns of 127%, which is pretty impressive. You can't really deny that. Gold had returns of 30%. US small cap stocks 104%, US stocks 70%, emerging markets 70%. But what the key thing that you want to really look at is the downside. So what was the actual downside of some of these things? We can see gold only had a minus 4% downside, which isn't that bad, which shows that gold is still a good hedge to and a good storehold of wealth. Silver, as we know, is a little bit more volatile, 34% downside. And US small caps had a downside of 42%, which is massive. Then in terms of US treasuries, like US bonds and stuff like that, we can see, again, not really much downside, 1.8%, and upsides of 5.6%. So we can see there, if you don't want your money to grow, you just want it to stay in the exact same place, US treasuries and gold are kind of your best bet there. US dollar index had a bit of a drawdown. Real estate only had drawdown of 38%, but had gains of 46%. So again, we kind of see that real estate didn't do as well as stocks, but it didn't have as much of, it had almost an equal drawdown though, which I think is something that people should pay attention to for people that are pro-property, anti-investing in stocks, is that real estate drew down 38%, stocks drew down 32%, and the gain was 70% versus real estate gain of 46%. Now, crude oil was one of the biggest returns of 184%, but the drawdown was 72. Now, again, there's a lot of people that are really into their currency. We can see that currencies wise, we had the Australian dollar, which fluctuated like crazy with a drawdown of minus 21%, and an upside of 39.7%, which for a day trader, Australian dollar, it shows you there's a lot of volatility in the Australian dollar. So that's something that, based on 2020, I'm going to look at maybe some potential trades and some things that I see in the Australian dollar. Euro downside, but you can see that the Swiss franc really is as strong as they say it is, because the downside was only minus 2%, the same as the Chinese yuan, which I think is the most interesting thing, that the Chinese yuan, the Chinese currency only went down by 2%, along with the Japanese yen at minus 3%, in comparison to the US dollar, which went down -7%, and the UK pound -13%. So we can actually kind of see that really the Japanese yen, Chinese yuan, and the Swiss franc are better currencies than than the UK and the US. So that's kind of a bit of a clear changeover there of what's happened with currencies. Bitcoin's been omitted from the chart. Bitcoin's maximum drawdown for 2020 was 46.2%, with returns of 300% over the year, and returns 651% if you include the 2020 low. So yeah, but we're going to carry on. So let's look at the actual stocks. When we look at the S&P 500, maximum drawdown areas was energy. Energy was the biggest losing sector, of -62%, which is crazy. Financials took a massive hit last year, and so did industrials. Industrials, we know why, because people couldn't go to work, and then probably consumer discretionary because people couldn't buy things. And then in terms of the biggest gains, as we know, consumer discretionary, even though it had some of the biggest drawdowns because people couldn't go shopping, it had some of the biggest gains of 96.3% because people spent more money than ever because they did. People just buying shit. Like I did a post the other day about designer brands have had more transactions and more sales than ever, which shows if you give people stimulus money, it goes back. You know that saying of how like you could get rid of all the money in the world and it'd end up back in the same hands. This year has really shown that because people were literally given free money and it went straight back to the richest people in the world. So we can kind of see that financial literacy is a massive, massive problem. Then what other areas? What would you say the most stable investment there? I'd probably say was healthcare, between healthcare, utilities, and real estate in terms of investing on the stock market. Now, the biggest winners, Novavax research, because them and Moderna, because of obviously the vaccine and things that happened with them. So they increased by 2,731%. If you were invested in them, you have hit the belly, the term would be. You've done pretty much almost better than you would have done with cryptos, which is crazy to think, especially being as a 5% return is meant to be good. You got 2,731, ha 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 ha, you are laughing to the bank. Well, not to the bank, because who uses banks anymore? Excuse the pun. Anyway, so Tesla 745%, Moderna 453%, Zoom up 400%, Bitcoin 303%, and any IPOs that happened this year 108%. Now the biggest losers, that isn't really a no-brainer, really. Carnival Corporation -57% because of the cruise lines. We saw that happen. That one was a bit of a given. Then also energy stocks -38%, Air Canada -53%, crude oil, which we know had a recovery, and the good old FTSE down 14%, which still hasn't had a recovery because the United Kingdom is a great country. I don't know if you could tell my sarcasm there. Yeah, it's a great country, but in terms of investing in, bloody hell. So here is just a comparison of Bitcoin versus Ethereum. So I've been doing a bit of research on the two over the last couple of days. And what I've kind of concluded is that, again, just like with the whole Rothschilds and Bill Gates thing, people aren't really doing the research and actually looking at the numbers. So the numbers are as follows. Between what date was it? August to now, we can see that this one on the left hand side is Ethereum. It's gone up by 293%, whereas since August, Bitcoin has gone up 313%. Now, when we look on the next one, and we go a little bit further back in time, and we go back to March when the lockdown kind of first started happening. Oh, actually, I've used the wrong image on the left there. Sorry about that. So ignore that image there. That image is meant to go with this image. So we'll skip March. I'll just read out the numbers to you. So March, Ethereum returned, if you go back as far as March, Ethereum's returns are 1,255% return, which you can see here. And Bitcoin's since March, their return would be 940%. So we can see again there, Ethereum did almost 25%. Well, not 25%, but almost 300% better than Bitcoin, but nobody's talking about it. Then also, when we look at it on the bigger scale, when we do since 2018, we can see that Ethereum has returned 1,400% and Bitcoin 1,200%. So the question is why is nobody talking about this? Because nobody's talking about it because more people are Googling Ethereum than ever. So the last time Ethereum had loads of people Googling it was 2018. We can see here on the left-hand side, the massive spike. So people have had 2 years to think about cryptocurrency and to think about investing. And now we can see that being as people have had 2 years to think about it, it's very likely that now people probably will start making their first investments into cryptocurrency. Now, use cases against the two is obviously Bitcoin, as we know, nobody knows who's created it. It's this mysterious gentleman called Satoshi. The original white paper and the source code for it has disappeared, so it can't ever be controlled. Ethereum has got a creator, it has got a designer, and the way that cryptocurrency, the way that Bitcoin works is every time that a computer within the network solves a mathematical equation, a coin is created. Now, with Ethereum, it's a little bit different. Ethereum works based on creating a contract. So this contract is either a yes, no code. So, you know, like how the internet is based on ones and zeros, Ethereum basically, each time a calculation is created, creates a yes or a no. So the exact same way that the internet is created off ones and zeros, you can create the internet 3.0 on the Ethereum network. Now, why this is good is, say, for example, for hacking and for cybersecurity. So it means, say, for example, if you're making a transaction, you're buying a house or you're gambling or whatever online, it would mean that traditionally your money or whatever you're doing or whatever information you're storing goes through your computer to the network and then eventually goes to the server for whatever company you're doing a transaction with. And that server can be hacked. And we've seen some massive hacks this year with the SolarWinds hack. We've seen some crazy stuff happening this year. Whereas with Ethereum, it would mean that whatever information that you're doing, whatever transactions you're making, it's recorded instantly and split up over every computer that's on the Ethereum network, which could be millions of computers. Now, each time Ethereum is used and someone develops an app on it or develops a website on it, it creates a coin. And every time you create a coin, you can create a new app. So it's just like it makes sense in comparison to some of the other things. Gary Vee really backs it, and at the moment it's got a 21 billion market, 21 billion locked into it that can't go anywhere based on the yes no contracts. So for me, I just feel that Ethereum has a better use case than Bitcoin. That might all be complete jargon. If you've got any questions on what I just said, pop it in the chat and I'll try and answer it and break it down for you as best as I can. Now, this is overlapping Bitcoin to Ethereum, and you can see that Ethereum's in the yellow and Bitcoin is in the white. You see that Ethereum's kind of chasing Bitcoin. It's on like a year delay. So we can see it's pretty much done exactly what Bitcoin's done, but just 1 year behind. So we can see this is kind of where we're at now with Ethereum. So this high here was when Bitcoin got to 20K. So this theory suggests that Ethereum now would get to around 20K in 2021. Or it could just turn around now. But it's more than likely that because of the last time it hit the high, it will hit another high, especially because if Bitcoin is making that massive high, it kind of drags Ethereum with it. Now, the reason it drags Ethereum with it is because when people are researching and Googling cryptocurrency and trying to understand it and trying to look at Bitcoin, the second thing that they will always see is Ethereum. So, and then they'll kind of see it. And if they do their research, they'll realize that Ethereum logically and for use case makes a little bit more sense. People can build websites and apps off it, and you can build like a secondary internet can be created through Ethereum, whereas through Bitcoin you can't really create anything on it or with it. It's just an invisible coin that nobody can see, touch, or hold. So it's not really tangible. It doesn't have like a tangible asset side to it, whereas Ethereum does. So the future of tech, this is something that I thought I would share with everybody, just to in terms of the direction that the world is going in, and in terms of, is tech worth investing in at this moment in time? Is it still going to be booming over the next year, just like we saw a massive boom for tech this year? The answer to that is hell yes. If anything, tech might have a bigger and faster next 5 years than the previous 2/5 years, because of blockchain and because of cryptocurrencies. So the main reason for this is because at the moment, bank transfers and transfers of money take too long. If you wanted to transfer over £1 million, you've got to go through all kinds of security checks. Whereas through cryptocurrencies, that can be done in a second. For those of us that are investing in trading, how long does it take for your money to come out of your trading account and into your bank account? It takes 2 to 3 days. And by the time that transaction is cancelled, you could have lost money. Whereas with cryptocurrencies and investing into companies, it means the big firms, the big whales like Warren Buffett, like Ray Dalio, like just the biggest investment and big companies in the world, they can invest money into things instantly, and that money instantly ends up in the bank accounts of these mega companies, which allows them to instantly make innovations and purchases and pay for things. So it will just speed up the process of everything, really. And some of those things that are in the pipeline, we can see that the white dots are things that are kind of already being done. Oh, actually, this one's, I've used the wrong image. My bad, guys. I've used the one since August 2019. The one since August 2020 actually has health passports on there. And who's most likely to create health passports? Well, there's a certain mobile company that's been making some moves into the health market, into the fitness market. And they also have a watch that can track your heart rate and monitor your sleep, and is also invested in heavily by the Rothschilds. I wonder who that is. Any clues? If anyone's got any clues, type it in the chat. It's Apple. Just thought I'd kill the curiosity there. So yeah, in terms of the things that are in the pipeline, again, when you use, there's a website that I'm going to show you. I think I've shown some of you before, Quiver Quantitative, which allows you to search the patents that have been created by some of these biggest companies. And we saw that NVIDIA have got mind mapping and virtual reality created from your imagination. They've got the technology to do that, and they've patented it. So it's just about releasing it to the public. So all these things here that you can see that we're just going to quickly go through are things that the patents have pretty much been created for already. So things like, or the research is being done towards. So AR cloud. So what is AR cloud and immersive workspaces? This is where people's offices through virtual reality and augmented reality will be in their home. So people won't actually need to go to an office. You'll be able to literally see the facial expressions of your work colleagues in a virtual office in your house. So that's pretty impressive stuff. Decentralized autonomous organization. What that means is basically drones. If you saw the 2021 New Year's Day celebrations with the bird and the NHS drones that was happening, that is autonomous organization. But decentralized would mean that it can do it without any coding and without any input from a human. It would just be able to make movements of its own accord intelligently. Nanoscale 3D printing. What is nanoscale 3D printing? Nanoscale 3D printing is being able to print and create pretty much anything on a nano level. So you're talking almost being able to print and create white blood cells and red blood cells, which again is crazy. Flying autonomous vehicles and autonomous trucking. Say no more. Elon Musk, that's what his plan is. And again, I don't know if anyone noticed, Elon Musk just did a recent call the other day touting his autonomous driving. And he actually said that since 2016, both the hardware and the software has only been intentionally designed to create a robo-taxi. Say no more. So for me, just based off the fact that that was the whole intention for Tesla, that means that Tesla's only intention ever has to be to become an asset and to produce better income than real estate. So owning a Tesla is pretty much like owning real estate. People are going to be able to get the same monthly returns off a Tesla as they will from real estate. Transfer learning. Yeah, I'm going to stop here because this is where things start getting a bit crazy. So transfer learning, I'll just stop on that one. Transfer learning, what is it? It's the ability to transfer and upload your learning. So these are some of the things in the pipeline for the next 5 years and why I'm on this quest to provide financial literacy, because the gap between humans is going to start getting ridiculous. So predictions for 2021, ESG reaches a tipping point. So that's like investments into environmental, social stuff. Brands must be authentic and values driven. Yep, people just won't care anymore. Big tech backlash continues. Well, with Facebook being used to organize the storm on the Capitol in the States, as we've all seen, maybe big tech might have some answers. Bitcoin hits the 50K mark. I think that's going to happen. Certain mid-sized US cities get a boost. Maybe inequality continues to worsen. Well, yeah. If cryptocurrency becomes a main adopter by the big investment firms, definitely the gap's going to get bigger. Individuals and employers start taking wellness seriously. I'm hoping that one happens. And we can kind of see that happening because there's been a big switch towards mental health over this lockdown period, and also a big push on, believe it or not, magic mushrooms and psychedelics being used for depression and mental health. China has a strong 2021, don't doubt that. A broad trend of decentralization, yeah. Facebook will bend and possibly break. Not too sure about that one, especially with their new WhatsApp rollout. I don't know if any of you got the upgrade and the update. Movie theaters begin their next act, which I think will be the VR space. A great rethinking of office life is underway, which we can already see that. A weakening US dollar, a source outlooking on SPACs, all eyes on Apple, ballooning debt and deficits, low and stable mortgage rates, global GDP growth, strong US housing market, cautious optimism about the European economy, positive growth for small cap stocks, and the Summer of Love 2021. Well, let's hope we have a Summer of Love. So a quick breakout strategy that was shared by, what's his name? Ludo, that I thought I would share with you, anyone that didn't make the call. And it would also be good to just kind of go over it again. So what he's talking about is about how the big money flows into the market. So we have different phases. We have the expansion phase, the contraction phase, and then we go on to the stage 2 of the money phase, and the same thing starts to happen. So what happens is the expansion phase is where a price where the big companies, the big investors that actually make these candles happen, not us. They are pumping money into a stock. So say, for example, Peloton, they're investing because they can't do it all at once because their money flow is too big. So they have to, and again, because of the crypto not being enabled and because of the way that money is at the moment, it takes too long. So they have to do it slowly. Whereas crypto will allow pump and dumps, which will mean that markets will be way more volatile. But anyway, the expansion phase, as we can see here, goes up and up and up and up. And then the contraction phase. So what happens is the companies start doing a sell-off to allow the price to come back down towards a trend line because they're seeing the exact same information we're seeing. And then they tend to follow each other on what's happening. Now, what will happen is the smart money will actually then leave around here. So you can see where this gap is. Leave around here, and then the retailers will push it up to about here. So it makes a difference, but not as much of a difference. And then boom, they'll pump it in again, which will take it to about here. And then they will leave around this mark. And then the retailers push it up again, thinking that the big investors are going to be putting more money in and thinking that, oh yeah, it's a hype. Yeah. This is what everyone's talking about. Invest in Peloton, invest in Peloton. It'll take it to about here. But because there's no one investing in it anymore, it just comes back down. So that's a way of explaining it. If we look at how you can use this as a trading strategy, it's about taking advantage of the expansion phase. So the expansion phase is more or less where the resistance is. So what it would mean is when a company hits a new highest high. So when you get that kind of alert that Tesla, Peloton, Microsoft, Google, whatever it is now at the highest price it's ever been at, what do you think most retail investors are going to be doing? People are going to be rushing to go and invest, like what's happening with Bitcoin at the moment. Oh my God, I don't want to miss the boat. Fear of missing out, and people just rush and try and put their money in. So what they'll try and do is they'll try and catch the train, even though the train's already gone. So the big boys have already left if once it's hit that high, because everybody knows you don't buy the high. So once a company hits the highest high, the big boys leave. However, the people late to market, which are the retailers, ordinary people, they still get in and put their money in, and it will pump up just a little bit more. But then as soon as you get a red candle, that's when it will start turning down and then coming back. So there's a potential for a trade system, which I'm experimenting in at the moment. I'm going to back test it, which you set yourself alerts anytime you mark off where the highest highs are. Actually, in fact, what I'll do is I'll just show you on IG. It's a bit of a better example. So you can see you'd mark off your resistance at the highest high. Then where this highest high is, just here, this would also be your stop loss. And then you would run a trailing stop up to here. And wherever it goes, it's going to take you out at the moment it starts turning back around. So you're just basically creaming off the top of the retailers that don't really know what they're doing. So it's quite, well, you could say it's minimal risk, but I don't know. So let's go on IG and give you an example of how that would work. Thanks for sticking to that so much. Okay, cool. So let's go with the Japanese index and do it there. So let's say, for example, here, right now, this is the highest high on the Japanese market, right? So you would mark this off. Let me just move this down. I think this probably worked really well with currencies as well. So you'd mark this off as the highest high, right? You would set an alert for that. If it goes over this price, you get in it. So you would get an alert to either your phone or whatever it is. And then all you would do is you would set a stop loss literally underneath that line, and then a trailing stop of maybe even 2 points. So if it goes up, it goes up. but you kind of want it to match what your stop loss is, otherwise you won't break even on it. So you'd be risking £20 and making £20, but then what would happen, let's try and bring this in on the 1 hour. I personally don't like this strategy that much, but I'm just sharing it with you. Hopefully it makes a bit of sense to you. Okay, so the way that the trailing stop moves is as the price goes up, it moves your stop up automatically. So let's say the price now goes beyond here and you've triggered this trade, your stop would then go to here automatically, and you take profit will just continue. I hope that makes sense. If it doesn't, drop me a message. I'll try and go through it with you in a little bit more detail. Cool. So stock earnings. What have we got? What have we got this week? So earnings this week to look out for. Which bad boys have we got? Carnival. Talk of the devil. Well, how do we think Carnival has done in the last 3 months? Have you seen any cruises? I haven't. Personally, I haven't. And that's before the bell. So that's literally going to happen tomorrow morning. So that's probably going to gap down. So it's probably too late to get in that one. We probably need to get into that earlier. Bad times for Carnival. See how they look. Nothing really too clear on Carnival. You can see that there's a clear downtrend, but again, it's nothing too clear. I'm expecting a gap down on their earnings report, to be honest. One. Again, it's trying to recover, but it doesn't have a chance in now. Of course, that's Carnival on Monday. On Tuesday, we have Organigram, not heard of them. Four Seasons Education, not heard of them. No, not heard of any of them. On Wednesday, we have, again, no one I've really heard of. On, BlackRock. Now, if you know who BlackRock is, you know who BlackRock is. And that is, their earnings is on Thursday before the bell. So we'll have a look at that. And what are the chances that JP Morgan, Wells Fargo, and Citigroup are literally the same time, pretty much? So let's have a look at their earnings. We'll just quickly pull up BlackRock. Surprise, surprise. So I'll just quickly show you the way that I do any, let's just put it on live. So for any chart that I'm looking at, first thing I want to do is mark up the monthly. So never look at it just on the daily. Never, ever, ever, ever do that, because you're not getting the whole picture. You're just basically, it's like, think of it like a book. If you're looking at it just the daily, you're just flicking to a random page in a book. You don't really know the story. You don't really know what's going on with it. Whereas going to the monthly, you've got the whole book, you've got the whole story, you've got all the chapters, you know its history, you know its ins and out. Just think to yourself, would you, like, think of it like dating. You kind of want to at least see a girl's Facebook profile first. You know what I mean? So put this one in nice and thick. So you can see there, really strong monthly trend line. And we can see it on the monthly. The stochastics is through the freaking roof at the moment. And whilst we're here, I might as well share a little bit of education on the Donchian. So the Donchian new update that I've had on how it actually works is the top line is actually the average price, the average high that it's got to in the last 20 days. The bottom line is the average low that it's got to in the last 20 days. And the midline is just the average of these two in the last 20 days. So one of the straight trading strategies, as well as when it pokes out of here and when it pokes out there. So as we know, if it pokes below, it's going to go up. If it pokes up, it's going to go down, more than likely. Not always, but more than likely. So the other trading strategy to it is if it goes over the halfway point of the Dojian, which is something that I noticed in a couple of my trades throughout last week, is that they were hitting the halfway point on the Dojian or going, or something was happening with them. But ideally, you want the halfway point along with the trend line. So we've drawn in our monthly. Now we're going to draw in our weekly trend line. And by the way, I did get back into PagerDuty and I did win that trade. Using this new Donchian strategy, actually, which we'll show you guys in a second. So we see here, nice touches here on the weekly. So we're now going to look at that weekly. Nice, 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 nice. Is there a possible retracement? No, I don't think so. I think that's going to carry on going up. So now we look at it on the daily, and now we would pick our entry. But BlackRock's already started, as we can see, before their announcement. I think it's very likely that it's going to carry on doing that, personally. It's not really a clear support or resistance. It's nowhere near the halfway point. If any worst case scenario, what this might do is come down and hit this halfway point here and then bounce back up. Just based on the fundamentals that I know about BlackRock, it's, yeah. Okay, cool. So another one that everyone's talking about at the moment is Argo blockchain, because obviously there's a lot of hype on crypto. There's a lot of people investing into blockchain and into the technologies, not having a freaking clue about it, including big banks and big bankers. So you can see that there. Then I want to share one piece of final gold with you before I get off, and that is how to backtest your portfolio. But unfortunately, YouTube, you're not going to get that because I don't love you guys as much as I love the people that are supporting me on the Zoom. So sorry, YouTube, but that's that for you. Stop live stream.